And from there, I remember you saying that even you have your kids who are 11 and 13 years old, if I'm not wrong,
Yeah,
and
yes,
they have
correct.
already started investing in the stock market. So
True.
can you,
Yes.
I'm very curious to know about that. Can you share that with us? I have got the confidence. I thought of investing my money. So first of all, can you tell me who is the best broker in the market, like Zerodha, or there are some other people are also there in the market. So which one is the best in terms of ease of use and in terms of money also?
As such, I repeat, please don't entertain WhatsApp tips, Telegram tips. Better please block them immediately. As soon as you get a call, block them immediately. If you want to invest, learn on your own, learn the knowledge of stock market and then invest.
Why should people buy your course when there are so many other courses available in the market? What is that pinpoint which makes your course different from others?
These kind of events come out, trigger, the markets will react and the stocks price will go down. And people suddenly they panic and they withdraw their funds.
So since you spoke about gold here, do you want to throw some light over there? So gold is all-time high right now. Whether we should invest in gold or not?
My dear friend who are watching, you can start investing as little as 100 rupees.
Hello everyone, welcome back to another episode of Blossom Every Day. On this podcast, we invite amazing people from different walks of life who share their success stories, their failures, the lessons they have learned, and the exact steps they took to achieve what they have today. The idea is simple. When we learn from their journeys, from both their success and their failures, we too can grow faster and create better lives for ourselves. So, in today's episode, we have someone who is going to make the world of money and investments feel a lot less scary and a lot more exciting. He is a stock investing coach and the founder of MB Finance Academy and an Amazon #1 best-selling author. With more than a decade of experience, he has helped people not just invest smartly, but also think positively about money. What I really love is that he makes stock market investing so simple that even if you give just 30 minutes a week, you can start building wealth with confidence. And the man is on a mission to create 1 lakh independent investors by 2026. And today he's here with us to share his wisdom, his story, and some powerful tips to help you begin your money journey. So let's welcome the amazing Mr. Maruthish Babu. Hi Maruthish, welcome to Blossom Every Day, and thank you so much for coming to our podcast.
Thank you, Rachna. Thanks for inviting and thanks for this opportunity. I'm really excited to share my insights, my journey with your audience and amazing learners.
Thank you so much. Looking forward to the conversation today. And so let's start with the very basic.
Yep.
So that even people who are new to investment, they can also start their journey with confidence. So
Yes.
my very first question is, if I'm very new to investment journey, the first confusion that comes to my mind is that whether should I invest in the stock market, in SIP, in FD, in long-term investment, short-term investment. So there is so much of chaos, right? So can you just differentiate, can you break down all these terms for us?
Yeah. See, when you refer for investing, when you think about investing, overwhelming at times is also good because yes, you are thinking about investing. And coming to the instruments which you have referred, FDs, which gives you around 6 to 7% returns, and then PPF, Public Provident Fund of Sukanya Samruddhi, which will give you around 7.5 to 8.8% interest. And if you keep it in a fixed deposit, somewhere around 5% returns. And if it is lying in your savings account, it will be some 2.5 to 3% returns. So these are the instruments which will give you very less returns, but of course, it is a steady returns and safe returns. But if you're looking to gain some extra returns, then you should look for stock market or mutual funds. When it comes to stock market and mutual funds, as a beginner, if you're starting as a beginner, then I would suggest go for mutual fund. Mutual fund is like ordering a thali at a restaurant. So where you get wide variety of recipe dishes in your plate. which is nothing but different kinds of stocks put together, which is managed by an expert. Whereas
Okay.
stock market, as an individual, you need to learn about stocks. Wow, over a period of time, once you get confidence, once you are thorough with the stock market fundamental analysis, technical analysis, then you pick stocks which are comfortable for you, and then start small. Invest with a small amount of money, be consistent, maintain proper risk management, and aim for long-term returns. Market will reward you. So, as an individual, if you ask me as a beginner, start with mutual fund with small amount, but be consistent.
Okay. And what is SIP? Is that safe, or is it different from mutual funds? How is that?
SIP, again, it is systematic investment plan. You
Right.
park your money in your bank deposit, saying that, and communicating to the banker saying that, okay, withdraw my money to so and so mutual fund. Whichever the mutual fund you have opted, that mutual fund will withdraw the money from your bank account, and they will allocate some units. In terms of mutual funds, we call it as units. They will allocate the units as per the stocks which you have bought. And at the same time, stocks also you can buy on a periodic basis, where you have to buy manually. There is no SIP in stocks. Whereas in mutual funds, yes, you can opt for SIP, and then you can purchase those mutual funds.
So, for a person who is earning a salary or who is just starting his career, so what is the safest and easiest way to begin investing? And we should start SIP, or whether we should do mutual funds, or start a demat account and start in the stock market. What should we do?
Yes, I mean, as a beginner, please start investing, whether it could be mutual fund or else the stock market. But if you are a beginner, you are not confident about the stock market, go with the mutual fund, which is a safe route. As I said earlier, it's a thali. You are ordering a thali which is having wide variety of dishes in your plate,
Right.
and which is managed by a similar to mutual fund, which is managed by an expert. There will be different kind of stocks in your portfolio. Once you become confident about market, once you start studying about the stock market, then you choose stocks one by one, slowly, with less amount of investment, and also be consistent, be study the market, and then invest accordingly. Starting, I would say that, okay, please start with the mutual fund route. Over a period of time, once you become a confident investor, then start your own style of picking stocks in your portfolio. Either of them should not stop your investing journey. Please start small and be consistent.
So we should just start somewhere, and the mutual funds is the safest course of action in the beginning. So now when we are trying to invest in the mutual funds, again, there is a lot of confusion in the market. There are so many mutual funds, low cap, high cap, mid cap. So which one should I opt for?
See, I mean, there are different kinds of market size. Large cap, they are, they are already big in market. That means famous companies like, for example, Reliance, HDFC, Infosys. These are all big in size. In market cap wise, they are big, but they will be having they are stable, and they will give you consistent returns. Whereas mid cap companies, they are mid-sized companies in terms of market capitalization. They are having a fast growth. Whereas they are fast growth companies, but little bit risky. And at the same time, there are small cap companies like startups, which are having high growth potential, but at the same time, very risky. So if you're a beginner and you want to look for a safe kind of journey, then go for large cap. And once you become confident and once you are aware of the stock market, then try with mid cap and small cap, because those are the companies which give you high returns, better than the standard market returns. But at the same time, they are risky. So you should be knowing your risk position. You should be knowing what kind of risk I need to handle while entering into the mid cap and small cap segment.
Okay. So you are saying that to be on the safer side, to begin with, we should invest in the large cap companies because they are more stable, and obviously they are growing and stable. Okay.
Yes.
So now, if I'm going for a large cap, I think my investment should be a big a large chunk of money, or can I start with like 500 or 1000 rupees a month also in large cap companies?
This is one of the misconceptions, Rachna, in the market. I mean, people are having that, hey, if I have to invest in mutual funds, if I have to invest in stock market, I should have large amount of money.
Mm-hmm.
My dear friend who are watching, you can start investing as little as 100 rupees. I
Wow.
repeat, I repeat, you can start with 100 rupees also, whether it could be mutual fund, whether it could be stock market. Only thing is you start small, be consistent. I'm repeating again and again, be consistent. The reason is, Rachna, the markets are up and down. The markets are like waves. There will be up, there will be down. But how consistent are you in the stock market will make you a successful investor over a long period of time.
Right, Maruthish. Consistency is very important, not only in stock market, in any area of life. Unless we are
Hmm.
consistent, we cannot really grow in our life. So,
Absolutely.
but when we talk about consistency, especially in stock market, fear is a very big part of our life. And when we are investing in stock market, so that fear sometimes takes over when market is going down and everywhere the negative news is coming out. So at that time, people starts panicking and they tries to take out their money from the stock market. So that consistency kind of breaks there. So what do you want to say to those people?
That's what I mean. I tell my community members that be a rule based investor. When I say rule based investor, you should be knowing your entry and exit rules before entering the stock market. There will be external factors coming like this: tariff war, Russia Ukraine war, COVID. These kind of events, they keep on repeating even in future also. But how well you are prepared with your risk management, with your entry and exit rules, these play a key role in your investing journey. And at the same time, mindset also plays very key role. As you rightly mentioned, when these kind of events come out, trigger, the markets will react and the stock's price will go down. And people suddenly they panic and they withdraw their funds. And that again, when markets recover, they enter the market at peak. And
Right.
when the markets go down, they sell at the bottom. So entering the market at the top and then selling at the bottom. So the overall end of the period, if we see, their returns will be negative because they are
Absolutely.
entering the market at peak, they are selling at the bottom. That's not the way of approaching the stock market or else your investments. You should have proper goals and you should be having your proper entry, exit, and then risk management. Then these three rules will make you a successful investor.
That's wonderful, Marutish. But it's very easy said than done. That you just follow the systems of entry and exit, and do not panic, and follow all the systems, follow all the rules, and play according to that. But our emotions, they have the capacity to take over many a times. So do you teach people some kind of tools, where they can master their emotions in that time of panic? Because that emotional mastery is very important when it comes to anything in life, not even in stock market, but anywhere. So do you give any tools for that also?
Absolutely, absolutely, Rachna. I mean, that plays key role. Mastering our emotions plays a key role not only in stock market or investment, other parts of areas of life also. So that's where I mean, in my program, not only strategies, I also teach them how to overcome their fear and greed. As I said that there should be proper entry rules and exit rules. Even while markets are going upside, if there is no entry rule, I tell my students that not to enter the market, even when the markets are going upside. So if there is a clear cut entry rule, then only you should enter the market. Again, before entering the market, I tell them that know your exit. If you
Okay.
know your exit, then only invest. Else, please stay away from the market. Keep your funds in your bank account safe. And at the same
Right.
time, you have to control the emotions. As I said, that market will be up and down. You need to have that. You need to manage those emotions when the markets are going down. If you're not having your proper exit rule, I mean, if the exit rule is not triggered, I would say that don't panic. don't sell the stock unnecessarily. It could be mutual fund also. Don't sell unnecessarily. Stay committed, stay consistent, and wait for the exit signal to trigger. If exit signal triggered, then yes, please exit. Else, be consistent with your returns. In order to
That is
manage those emotions, I also tell them that, okay, do some kind of meditation. And also I share one kind of audio file. That is, Earl Nightingale, so you might be knowing where
yes.
the video. Yeah, I tell them
Yeah.
that to listen to that audio file every day. So
Okay.
that motivates them, and also that makes them to stay committed, to stay disciplined in their investing journey.
Hmm. That's wonderful thought actually, that before you enter, you should know your exit point. Otherwise,
Yeah,
you will be lost and you will be more panicked if you don't know where to exit from.
true.
Okay, so that brings me to the next question, that there are so many things in stock market also. One thing is intra trading, then there is swing trading, then there is long term investing. So what is the difference in all of them, and which one a beginner should focus on?
Yes, as you rightly mentioned, there are a couple of trading styles. Intraday is you will be entering the market on the same day and you will be exiting the market on the same day. So
Okay.
same day entry, same day exit is called as intraday trading.
Mm-hmm.
Swing trading, it is like you will be carrying your investment for a period of days till weeks. So that means the duration will be from days till weeks. It is neither intraday nor long term. So within short duration, you capture that price movement, you make some money, and then you come out of that particular swing trade. Long term is you will be keeping your investments for more than 3 years, 5 years, 7 years, 10 years. Then you are a long term investor. So for a beginner, if you are focusing on long term, then please go ahead with long term investment, or else second option, you can start with swing trading, where you can capture the short term price movement by entering with proper entry and exit rules, and then you come out of that particular trade within days or within weeks.
Okay. So which one is safe?
Safe is always long term, and if you are expecting to make some money at a short term duration, then go for swing trading. Intraday, you can focus once you become proficient, once you become technically proficient, then focus on intraday. That should be your last option.
Hmm. But intraday feels like a gambling, because once upon a time somebody gave me an advice and I tried doing it, and it literally felt like gambling. So every day, you are just morning to evening, you are sitting in front of the screen and your heartbeat is racing up and down. So
Absolutely.
and at the end of the day, it is actually like gambling, because in gambling there is a saying, it's always casino who wins. And if you are doing intraday trading, then also it's the same thing. It's the casino who wins at the end of the day.
Probably I would slightly disagree with you, Rachna. Stock market is not gambling, but yeah, outside world people think that stock market is gambling. But
Okay.
if you approach the right way, it could be intraday, it could be swing trading, it could be long term, whatever strategy you follow. But if you approach the market with right entry and exit rules, with proper risk management, then yes, you will be able to make money. There why people feel gambling, as you mentioned, because friends advice, you invested in that intraday, and then because of fluctuation you made some loss, or it could be a profit, whatever it is. You should have that knowledge, not based on friends advice, not based on WhatsApp tips. Learn yourself, have the proper rules, approach the market in proper way, then you will then it is not called as a gambling. Instead, we call it as a systematic investment.
Right. All right. So now I have got the confidence. I thought of investing my money. So first of all, can you tell me who is the best broker in the market, like Zerodha, or there are some other people are also there in the market. So which one is the best in terms of ease of use and in terms of money also?
So there are wide variety of brokers, Rachna, in the market.
Mm-hmm.
Uh, Generally, we call them as a full service broker and discount brokers. full service brokers or else premium brokers. They're also called as premium brokers. And discount brokers, they're also called as non-premium brokers. Non-premium brokers or discount brokers, they charge very less brokerage fees. And at the same time, the service are limited. They won't be giving you dedicated customer relationship manager, or else they won't be sharing with you the research reports. So these are the brokers like Zerodha, Grow, Upstocks, LS Blue, Flat Trade, Shunya. There are many where their brokerage fees are very less compared to this non-premium brokers. Premium brokers are full service brokers. They provide research reports. They publish on a periodic basis. They give you dedicated relationship manager. They'll be having full support from their side, and they will be charging extra fees because they are providing these extra services like HDFC Securities, ICICI Securities, Sharekhan, Motilal Oswal, Edelweiss. So there are many. So as an user, if you want to start investing in the market, it depends on you which type of broker you want to go with. It should not stop your investing journey. Because of the broker, it should not stop your investing journey. Choose whichever broker you feel comfortable and then go accordingly with full service broker or non-premium brokers.
Okay. So now I have selected the broker. I've started investing also. And now what are the things should I look for while buying and selling the stocks? What is the criteria? We have been talking about entry point, exit point throughout the time. So how do I decide my entry point and exit points?
Okay. So two things we can do, Rachana, in order to before entering the stock market. One, either we can do fundamental analysis, second one, technical analysis. If you are approaching the market based on the technical analysis, then you will be looking at the price charts, whether based on the technical indicators, is it the right time to enter into the stock market or not? So it will tell you, the price will tell you that whether you can enter in that particular stock or not. And fundamental analysis, based on the stock fundamentals, based on their company performance, based on the company's growth, based on the company's revenue, you invest into the stock, particular stock. So fundamental analysis, it will tell you what to buy. Technical analysis, it will tell you when to buy.
Okay, so we need to look into both fundamental also and technical also. Both should be looked upon before we are making an entry into any stock.
Now, if you decide whether you want to be a technical analysis investor or a fundamental analysis investor. If you want to be a technical analysis investor, then you decide the strategies based on technical analysis, and then you, based on those technical strategies, you enter the market. If you're a fundamental analysis investor, then you will not look at the entry and exit price. You will look at the long term.
As a beginner, again, this is a confusion for me if I'm a beginner, that whether should I start from fundamental or technical. So how should I, curb that dilemma?
So as a beginner, I always suggest go with the fundamental analysis. Look at the few stocks which are very good fundamental, which are having solid fundamentals. Invest in them. For example, within your house, you can look at the electrical equipments. For example, fan. Look at the fan, which kind of brand you are holding, whether it is Bajaj Electricals, Havells. Invest in that Havells company. At your home, you can look at your car, which brand you are holding, Maruti car, Tata Motors, Hyundai. Invest in that particular stock. Person will be having two-wheelers. Look at the brand, TVS Motors. If you are having TVS Motor, invest in that. Then you look at your kitchen items, the atta you will be using. If you are using Ashirwad atta to prepare chapatis, invest in ITC, Dabur. So within your home, just look at these items which you are using regularly and start with small amount in those stocks. Once you gain confidence, then go with the technical analysis. Gain confidence in the sense, start learning about the stock market, and then go and invest as a technical investor.
Okay, so first fundamental is should be there. So, and you have broken it down so nicely that whatever we are using in our households, those are the things that are, widely used. And obviously, so because of that, those companies are doing good and they are going to do good. And that is a
Absolutely.
foolproof
Absolutely.
formula, actually.
Yeah.
That's
And
wonderful.
again, disclaimer, whatever the names I mentioned, those are not stock investment recommendations. Just for learning purpose, I just mentioned their names. So what I meant to say is, look at your household items, what you are regularly using,
Exactly.
and then study those companies and then invest.
Right. So now, after, I have invested, the biggest question that comes to anyone's mind is taxation. So how does the taxation works in term of a stock market? So I'm sure that every kind of investment I'm doing is having a different kind of taxation over that. If I'm investing long term, then that has a different kind of thing, and short term is different, and then SIP is different, FD is different. So can you break that down and tell our viewers that what is the taxation on all our investments?
So definitely, when taxation word comes or tax word comes, it feels scary, right? We feel scary,
It does.
right? Taxation, yes, there is mandatory tax. Whatever you earn, whatever you business you are having, you have to pay tax. As a public, as a responsible citizen of India, yes, we have to abide by the rules. Don't try to skip the rules. And in terms of taxation, for Rachna, your question, whenever you buy any stock and sell, there will be the profit, whatever you have made. So on that profit, you have to pay the tax. So short-term tax and long-term tax, if you're holding the stock or your investments less than 1 year, then it is called as short-term capital gains and you have
Okay.
to pay higher tax. And if you're holding your investments for more than 1 year and then you are selling, then you will be paying lesser tax compared to the short-term capital gains.
And
Okay,
how much that would be?
so for short-term capital gains, it is 15%, and for long-term capital gains, if you are selling after 1 year, then it is 12.5%. And at the
Okay.
same time, there are charges also will be charged by the broker for your buying and selling the stock. It is like brokerage charges and also STT, service transaction charge, and also GST, which is nominal rupees. And if you're going for the discount broker, the brokerage fees will be zero. So it depends on broker to broker. So two things will be charged. One is taxation based on your short-term investment or long-term investment. Second is regular charges, brokerage charges, STT and GST.
All right. And what about FDs and SIPs? How is the taxation over there?
Even if you see, look at the FDs also, once you withdraw the amount, there will be tax applicable on your investments. The returns, whatever you will be gaining after the FD duration, you have to pay tax to the government. It depends on the kind of instrument you are holding, for how long you are holding, whether it is for 1 year, 3 years, 5 years. As I said, if it is within 1 year, then it will be short-term capital gains applicable. And if it is long-term, more than 1 year, then long-term capital gains would be applicable. But please remember, these charges should not stop you from investing.
Of course. If you want to invest, then how will you grow your money anyways?
Yeah,
And
true.
it is a proud moment, when you pay a lot of tax. You should pray to God that 50% of the tax of this country I'm going to pay.
Absolutely correct. Yes. Yeah,
Exactly. It is actually a proud moment because if you are earning so much, then only you can pay so much of tax.
absolutely correct.
Income tax, there is a slab that up to 2 lakhs per annum, if you are earning, you don't have to pay any tax. So now, if I don't have any other source of income, I'm earning only through my investments. And through my investments, suppose in this year, I earned 2 lakh rupees. So now, do I need to pay the tax? Because I'm coming under that slab that I do not need to pay a tax for that much earning. Or is it computed differently?
So this tax, the salary bracket, it is completely different, Rachna. Your
Okay.
investment, whatever you are making, you have generated from your mutual funds, from your FDs, or from your stocks, or from real estate, whatever you made that returns, there this short-term capital gains and long-term capital gains will be applicable. No matter
Okay.
what kind of slab you are, whether you are
Okay.
in a free slab bracket or else you are in a higher tax slab bracket, it doesn't matter with the investments you are generating from other sources of income. This is considered as other sources of income.
Right. Okay. So we need to pay the tax any which ways. Even if it's a housewife or even if it's somebody who's doing a big business, they have to pay the tax for
Yeah.
long-term investments
As
and
you
short-term investments.
As you earlier mentioned, be a proud investor saying that I'm a taxpayer because I made profit from my other sources of income and I'm paying tax to Government of India for the development of the nation.
Absolutely. So now that brings me to the next question. Many people again have this doubt that should they manage investments on their own or they can hire an agent or financial advisor. What is better for a beginner?
So if you're a beginner and if you are not confident about the stock market, about the investment journey, then yes, please hire a professional who can handle your investments. So for example, best route is mutual funds. Go with the best mutual funds, check the mutual funds, study them, and then you invest either in large cap, mid cap, or small cap based on your risk appetite. And you just park your money in your bank account. Automatically every month through SIP, the amount will get deducted from your bank account and the units will be allocated in your portfolio. Every activity or buying and selling of instruments will be taken care by the expert, mutual fund expert. So that's the best place to start as a beginner. If you want to become independent investor and if you want to invest on your own, then learn the stock market and then choose quality stocks in the beginning with small amount, and then be consistent and also make sure that the proper risk management is maintained, and then you can slowly increase your capital in buying a more number of stocks.
Okay. And what do you have to say about those freelancer brokers? I mean, you talked about mutual funds, so that is, very systematic thing. But there are freelancer brokers also who comes to you as soon as you open a Demat account. I don't know from where they get your information and they come to you, they start messaging you, okay, I'm going to help you out and buy this stock, buy that stock. So what do you have to say about those kind of brokers?
It's very good question, Rachna. I mean, this is very important. Listeners, please focus on this. As soon as you open your Demat account, you will be keep getting calls from these kind of people saying that, "Hi Rachna, I'm calling from Research India company. We will suggest you very good companies which will give you very good returns." And if you get attracted by those words, and then you invest in those companies, at the end of the day, you will be losing your capital. I would like to share my journey also here. When I started my journey, initial days, I got one call like this saying that, "Maruthish, we are publishing potential multi-baggers for the month of September. Are you interested?" Multi-bagger? Yes, of course, I am interested. Then they diverted me, "Please join this WhatsApp group." I joined that WhatsApp group. And then people were posting every day saying that, "Okay, I made this much of profit. I made this much of profit. Thank you, admin. Thank you, WhatsApp admin." I was also excited. 3 days over, fourth day they said that we are publishing one multi-bagger. And this is the so-and-so stock, which is at penny price, around 10 rupees that point of time. So if you want to grow your capital, please invest in this stock and hold it for 300 rupees. So I invested in that 10 rupees with some 10,000 rupees. And within 1 week, it became 25 rupees. I was excited. 10 rupees became 25 rupees within 2 weeks or 1 week. Then I invested some more amount. Again, 25 rupees, it became 75 rupees within 1 month. Now more excited, I brought some more savings and invested. And then soon, within 1.5 months or 2 months, the stock price from 75 became 50 rupees. The community admin was saying that, "Please don't panic. It is having potential to become 300 rupees. From 50 rupees, very next day, it became 3 rupees.
Oh my
And when I
God.
start selling, there were no buyers. And when I
Obviously.
messaged the community admin, that WhatsApp group got closed.
Oh,
So,
okay.
so that's how there will be people who will be calling you and telling you that, okay, not only the stocks, they will also tell you that, ma'am, we will be doing profit sharing. Why don't you invest? We will guide you where to invest, when to invest. And then based on that profit, we will do the profit sharing 50-50 or else 70-30 like that. Please
Okay.
don't entertain such kind of WhatsApp tips, Telegram tips. I repeat, please don't entertain WhatsApp tips, Telegram tips. Better please block them immediately. As soon as you get a call, block them immediately. If you want to invest, learn on your own, learn the knowledge of stock market and then invest. Else, go with the mutual fund route. Don't expect instant returns in the stock market. Don't be greedy. If you become greedy, you will become, your capital will get wiped off. So don't do that.
Actually, you have given such a good example, and I would like to share one example of mine also. When I started my stock market journey, at that time, even I started this way only. So there was this broker who came, and he told me that I'm going to suggest you which stock is good, which stock is bad, and everything. So he told me to buy Kels Refinery at that time. There was a stock. You might have heard about that, and it was available for 1 rupee at that time, and he was saying it has the potential for reaching to 200 rupees, and so blah blah blah. So we bought again 10,000. So ठीक है, 1 रुपए में 10,000 खरीद लेते हैं. So I invested 10,000 rupees there. So eventually it kept on going down, down, down. 0.50 rupees आ गया, point मतलब 10 पैसे पे आ गया, and finally right now if you see, it's out of the stock market. It's not even in BSE, it's not in NSE, it's nowhere.
Okay.
Again, he told me to buy Punj Lloyd, same.
Okay.
So yes, that is very true that we should not listen to all these brokers. Either we should learn ourselves and put in some hard work and give some time and then start investing, or otherwise take a safer route of mutual funds. That's better.
Yeah. Yes.
Okay, so according to you, we have already discussed, I think, but again, if you want to tell something else also, that what's the one mistake that beginners usually make when they start investing?
Yeah, yes, of course. As I mentioned that, as soon as they enter the Demat account, one thing is they chase WhatsApp tips or Telegram tips, or else also they invest based on friends' advice or YouTube channels, and they lose their hard-earned money. Second, they chase quick returns. They enter the market expecting instant returns. So that's number two. And then number three, they don't people enter into the market without having proper clear goals of their investment. And also they will be doing random investing. So avoid these three, then you will be far ahead than others.
Right. So, and again, there is a belief among common people that stock market is only for rich and knowledgeable people. And we have seen it so many times that big and influential people, they have, inside information. And because of that, they know exactly when to enter, when to exit. We have seen so many cases in past also. But common men, they don't have that kind of information. So can a common man also grow wealth like those rich people?
Yes, absolutely. Common man also can grow in the stock market. As I said that have clear-based, goal-based investments, study the market, learn and then invest, or else go with the alternate route, mutual fund route. And if you see today, very big investors like Vijay Kedia, Rakesh Damani, so all these people, once they were beginners in their stock market investing journey, they started with small. Today they have become big investors.
Right.
So you have to start small and learn the art of investing, and then slowly scale up your investment.
Exactly. So it is a step-by-step journey. Actually, you can't think that overnight you are going to become rich. So you have to just take that first step at least towards that success,
Absolutely.
and then obviously over a period of time, with consistency, with discipline, you are going to reach there where other successful people are.
Yes. Yeah.
Okay.
Correct.
So now let's talk about mindset. I have seen on your YouTube channel also that you talk a lot about mindset. So how does this mindset affect our investment journey?
So as you mentioned, Rachna, earlier, that stock market is ups and downs. There will be, it's a cycle. Market is a cycle phase. There will be upside journey, there will be downside journey, there will be sideways journey. So when we hear the market is going down, due to panic, people sell their investments at a lower price. And by the time they take entry, the markets would have recovered and they have reached at the top. So in order to avoid that panic buying and selling, so I tell them that okay, master the mindset in terms of like controlling your emotions by practicing the proper meditation and also having listening to some kind of motivational videos so that they can train their mindset, and also at the same time practicing some affirmations which also lead to in your investment journey by proper uh, uh, I would say that to become like confident investment decisions. It will help you with these affirmations and mindset also.
And I think that's what your book is all about, which is Amazon bestseller 25 affirmations, right? Can do you want to
Correct.
tell more
25
about that?
Yeah, yes, of course. Yeah, 25 powerful affirmations, which I have written almost it's 2 years before. The affirmations which I have written in that book, the same affirmations even I am practicing in my daily life. Uh, those affirmations are completely related to money and also to attract, wealth related affirmations, which will help normal human being or person to overcome their fear and also to overcome their uh, uh,
Their subconscious programming that they have built since childhood, maybe.
true. Yeah. So to overcome all these obstacles by practicing these affirmations, they can become successful in their life and also they can become success in their investing journey.
Actually, affirmations is plays a very big role because subconsciously we have so many programs that we have made because of societal conditioning that we have gone through, and but when we want to change that, we need to make our own affirmations so that we can make our own identity. We don't live with the identity that is given to us by the society, and that's
True.
very powerful. Actually, thank you.
True. True. So for for investing journey, probably I'll just share one affirmations. By
Mm-hmm.
practicing an affirmation like I'm a confident investor, I'm a rule-based investor. So by practicing this affirmation, you are training your mind, saying that hey, I'm a confident investor. I can enter the market confidently. I make money from the market. So over a period of time, you forget the fear and greed of about the stock market. You forget about the external noise affecting the stock market. Then you become successful investor.
So, how frequently should we speak these affirmations?
Anytime, n number of times, whenever you are having free time, whenever you are approaching the market, whenever you are doing the buying of the stock market, say these affirmations aloud so that your mind can consciously remember that affirmation and then it train your entire body so that you become confident investor. There is no restriction that you should say at this point of time, but ideally, yeah, if you say these affirmations during morning hours and then while going to bed before going to sleep, if you say these affirmations, you are training your mind subconsciously so that reprogramming your mind to become confident investor.
Absolutely, because during morning and before we are going to sleep, our mind is going into that alpha state of mind, and that is the best time when our mind is ready to absorb whatever we give it to. And if we can, say these positive affirmations to our mind at that time, that is the best practice.
Absolutely correct.
Okay, so according to you, how important it is to have patience and practicing discipline in investing compared to intelligence?
Take patience, as I said that don't expect instant returns in the stock market. See, investing is a long-term journey. You have to have patience so that you get very good wealth at the end of the time. Like if you see, when you plant a bamboo tree, it takes time to grow. You keep on watering, you keep on watering, you keep on watering. there will be no result for 1 year, 2 years, 3 years. But fourth year, fifth year, small seeds will grow up, and then seventh year, sixth year, it will go just gigantic. Correct.
Exactly.
So these first 5 years, it was building roots under the ground. You are pouring the water, and it was making the ground fertile so that that foundation it becomes strong. And then seventh year, eighth year, 10th year, it is growing at tall as tall as you could even not imagine. So the same way, investing should be like that. I mean, have patience, keep on investing by finding quality stocks, fundamental good stocks, and then start investing with small amount, as little much as you can. And then be consistent and give the time to that particular stock to give you very good returns.
Right. And from this example, I realized, about compounding the wealth. So many people don't realize how important compounding is. And because of that, they might say that I have just 500 rupees or 1000 rupees to invest. So what am I going to grow out of this? So what do you want to tell them, to those kind of people who are, investing at a low scale, but they don't really understand that, power of compounding?
So as I mentioned that even with 100 rupees, 200 rupees, yes, we can invest in the stock market and also in the mutual fund. But yeah, when you hold it for long duration, it will give you very good returns. You can't even imagine what kind of returns you will be getting at that end of tenure. In between, there will be circumstances where your requirement will be to withdraw the funds. There will be situations to where you need money. So don't withdraw those funds. Instead of that, make sure that those investments tag to your goals. Tag it as your child education, tag it to your child marriage, tag it to your retirement expenses. Then when you try to withdraw that fund, hey, this is for my child education, this is for my child marriage, I should not withdraw. So when you tag your investment towards the goal, then you will make sure that you hold it, you will be consistent in your investment.
Right. This is such a good idea, actually. When you have a purpose for that investment, then that panic will reduce, I think, because you know that my daughter is going to get married after 10 years. So what is the hurry? If market is going down today, it is not going to stay there forever. It is going to go up also. So maybe
Absolutely.
who has seen after 10 years what is going to happen?
True. True.
Okay, that's wonderful. So now, can you tell our audience what all courses are you offering to them and how much time do they really need to invest in it? Because many of us are working professionals, or even housewives also nowadays are very busy because of the children's education and all the household works also. And we don't really have that much time to invest. So what do you have to say about that?
See, I have designed my program, which I named it as Stock Market Wisdom Mastery Program, which is an online program during weekends, Saturday and Sunday, 2 hours max, 2 hours max, and then only 30 days, 4 weekends. Within these 4 weekends, you will be able to learn from basics of stock market till advanced strategies. And these strategies will require only 15 to 30 minutes during your weekends and month ends. Monday to Friday, you can focus on your regular work, office work, or else household work. And also you can, I mean, homemaker, they can focus on their family, their child education. Even students who are going to colleges, or they want to make some kind of money from their income, or else from their pocket money, they can also invest in the stock market by spending only 15 to 30 minutes during weekends. I tell my students that, okay, give me your 4 weekends and I will make you confident and independent investor, so that you no need to depend on anybody, anyone about your investment decisions.
That's wonderful. So within 30 minutes, we can do everything. We don't have to invest so much of time. And so now, when you said that even college going children who, have pocket money to invest, they can also start their investment journey. And from there, I remember you saying that even you have your kids who are 11 and 13 years old, if I'm not wrong. and
Yes,
they have
correct.
already started investing in the stock market. So
True.
can you,
Yes.
I'm very curious to know about that. Can you share that with us?
Yeah. So I started teaching stock market some 3 4 years before. That too, one fine day, my son he approached me. Right now he's 11 years. That time he was 7.5 years. Dad, you always look at the stock market. Why don't you teach me? Then
Wow.
that question at 7 years, 7.5 years old kid is asking me, why don't you teach me? So I said, I'm ready. Then my daughter joined, my wife joined, and then my other close relatives, they joined. And then I started teaching them about the stock market, starting from basics. And
Okay.
whatever the strategies investment strategies I was following, I covered two simple strategies for them because they are beginners. They are not aware about finance. They are not about stock market. They are newbies in to finance subject. So after almost 2 months, they gave me positive feedback and they told me that they are aware of the stock market and they started investing. In fact, they started investing also. Then from those strategies, whatever I have taught, they are following from then till today. Their overall portfolio size is very less. Even now, their portfolio is 3.5 years over. Their portfolio size is less, but they're consistent in their investment journey.
Right.
My son and my daughter, both of them, they have started investing with simple two ETF strategies, which requires only 100 rupees to invest.
So that
And
100 rupees
also,
is per month?
no, not per month. Whenever they have their pocket money, they say they open their mother demat account, they log in, they enter the funds, they add the funds, they select the ETF, then they will invest.
Okay.
Order execution, everything is done by them only.
Okay.
And they also know that okay, what is their exit also. They have clear cut exit rule that they are going to wait for their college to get over, and then with that income they are going to start their own startup.
Wow. That is so fascinating and so amazing that you are teaching your kids at such an early age such a powerful skill. Because in schools and colleges we don't nobody teaches these skills, and these are very very basic skills that we should know. And because even when we were children, our parents used to manage all the money. Even when we became adults, they used to manage all the money. They always thought that we are kids and we are incapable of doing that. They never thought that we should also teach our kids how to manage it. So when we went out of our homes, when we started living alone, then that difficulty came into our life. Then okay, now I am earning money, but now how do I manage it? And that was that eye opening moment was there, that अब क्या अब तो कुछ आता ही नहीं है. So it's
Correct.
very crucial that we start our children from the beginning itself about investing.
True.
So do you have any special course for children also? Because children has a different kind of mindset and that learning pace. So and concentration pace also, they have very different from what we adults have. So do you have something very oriented for children itself that they can also come and learn with you?
As of now, Rachna, I have not planned specific to children, but yeah, this is
Okay.
a very good idea, which I need to focus on and then create some kind of curriculum or course specifically designed to children. Yeah, it's a good idea. Definitely, I'll take this as a feedback and probably I'll work on it.
Exactly. I think you should start because I don't see anyone in the market is providing any such thing. And if I'm getting this thing for my children, I'm going to pakka enroll them into your course.
Okay, sure, definitely. I'll let you know.
Perfect. Okay. So now tell me one thing. There is a famous quote by Warren Buffett. He says that do not time the market. All right. So what does it exactly mean? What is the meaning of timing the market? And do you agree with this quote?
Yeah. So time in the market, in the sense you are waiting for the perfect entry, taking the entry in the market when the prices are very bottom, and then exiting the market when the prices are very top. Honestly, nobody can predict what is the bottom, what is the top, even experts. no one can predict the market. So instead, timing the market, you should instead of time in the market, be timing the market. Timing in the market in the sense how long you are staying invested in the market. That plays a crucial role in your journey. So don't
Okay.
wait for a perfect entry. Rather than start your journey immediately. As soon as you are having funds, start investing, but be consistent and stay for long term. How long you are waiting, how long you are in that market is the what Warren Buffett says.
Okay. So now, a very hard question it is going to be. Why should people buy your course when there are so many other courses available in the market? What is that, pinpoint which makes your course different from others?
Okay, very good question. Yeah, thanks for asking this. Of course, as you rightly said, there are many courses available in the market, and there are many experts available. What makes unique from them is as I said, that my stock market program is weekend program, and also it's only 4 weekends. And the strategies which I'm going to teach is require only 15 to 30 minutes of your time during weekends, during month ends. मंडे टू फ्राइडे आपको कुछ नहीं करने का, यू नो नीड टू फोकस अबाउट द मार्केट. So that's how simple I have curated the strategy so that even working professional, homemaker, student can follow these strategies. And also I have created proper rules, entry, exit, and risk management. Like I tell them that, okay, become a rule-based investor. So that's how I designed my course, and and as I said, I'm on a mission to empower people to become confident investors by 2026 to 1 lakh families. And people who enroll my program, they become the part of my journey.
All right. So when we are talking about risk management, so since beginning we have been talking about that whenever we are entering into stock market, we should have discipline, we should have consistency, and we should have proper risk management. So what do you exactly mean by risk management? How do we manage risk, and what kind of risks are there?
Okay. Risk management in the sense, like once you identify the stock, you're not going to blindly invest your entire funds in one single stock. So you have to decide what amount of quantity of stocks you need to purchase. Whether from that 10,000 rupees, how many stocks, how much quantity I need to invest in that particular stock. So that is risk management. So risk management is nothing but, I mean, where we are going to identify that whenever we enter the market, we don't do the blind investment, complete fund entering into the one single stock. Instead, we will invest some portion of money of my savings into one stock. And then again, one more opportunity comes from this portion, I invest some more quantity. So you have to define what is your risk taking capacity. If the stock goes down, at what level you are ready to come out of that particular stock, and what is the loss you are ready to bear, or what is the loss you are ready to give it to the stock market. So that is the risk management.
Okay, so when we say that have a wide portfolio, so do not put all your eggs in one basket. So is that also a part of risk management?
Absolutely, yes. That is what we are going to cover. Let's say you are having a portfolio of 1 lakh. We're not going to invest complete 1 lakh in one stock or two stocks. We will be categorizing. We have to decide some portion of money in large cap, some portion of money in mid cap, some portion of money in small cap, some portion of money in gold, and also bonds. That is where diversification plays a picture in your investment. So that when the markets are doing good, or the markets are going down, your investments are stable, and your capital is protected, and we aim for some stable and good returns.
Okay, so since you spoke about gold here, do you want to throw some light over there? So, gold is all-time high right now, whether we should invest in gold or not.
Absolutely. I mean, gold is one very good instrument to invest, particularly people, I mean, household homemakers, women, they like to invest in gold. rather than purchasing as a physical gold, I would say that invest in digital gold so that you save in terms of making charges, then additional whatever the charges will be applied on buying physical gold. So instead of that, invest on digital gold, and at the same time, it should not be the 100% of your savings. It should be 10 to 15% of your investment towards gold, rest towards the equity segment.
Again, putting your eggs in different baskets. So don't put all your
Absolutely.
money in just gold, that because you are so fond of gold. So
Absolutely
just,
correct.
yeah, so spread it out. Very
Yeah.
nice.
So even silver also you can invest digitally. So it's not only gold. You can nowadays we are having silver instrument also. You can invest in silver also. Some portion of money in gold, some portion of money in silver, some portion of money in equities, direct equities, some portion of money in FDs, some portion of money in mutual funds. So diversify your investments.
Right. Okay, so Maruthish, can you share a few success stories of your own clients who joined you, who were newbies to investment? They didn't know anything about investment, and when they joined you, and they gained a lot of wealth through stock market.
Yeah, definitely. So there was one homemaker who joined my program, and then after completing the program, she told me that, sir, I'm a homemaker. I don't have active income, whereas I can start with small amount. I can start with 5K per month. I said, no problem. Start with 5K also. Out of five strategies, she picked up one strategy which required at month end only 10 minutes to identify one single stock which is at the top. We are having one strategy where during month end we apply some indicators and we identify one single stock which is at the top, which is having potential to go upside in the next few months. So that particular strategy she has chosen, and then she was consistent over a period of time, 6 months, 8 months. She saw very good results. Then her husband gave permission to increase from 5K to 10K. So within 7 months, she increased her capital from 5K to 7K, and then now she's having around almost some decent returns, better than FDs, better than mutual funds. But she's consistently following same strategy even now. And I'll give you one more testimonial also, one more example where mother and son they both joined this program, and they started with a short-term strategy. In that short-term strategy, during weekend you need to identify a few stocks, and then based on the entry rule you enter into the market. So the son, after coming back from the school, he comes and opens the demat account, and he says that, mom, this stock is going upside, this stock is coming downside, probably we should be cautious on this particular stock the next weekend. So this is how, I mean, the son who right now he is in ninth standard, three years or 2.5 years before he was around seventh standard. So look at the son, I mean the kid, student curiosity. So he's aware of that the stocks which he is going to invest, and also he's aware after investing he is also protecting giving caution to his mother, saying that, okay, see, this particular stock is going down, we should be cautious. Next week we should see whether exit rule gets triggered or not. So that's how, I mean, they're consistent, and they are rule based investors. I would say that they have become now confident and rule based investors.
Wow. And children are anyways quick learners. So if we teach them at such an early age, it's a blessing for them also, for the family
Absolutely.
also. It is so
Correct.
wonderful. So can you tell us, since your children are also doing investments from last 3-4 years, so how much have they made in stock market, and how has been your portfolio looking like?
So my kids, they have opened, they have invested into the ETF strategies in their mother account, demat account. So from the last 3.5 years, they are just following two simple ETF investment strategies, which require only hardly 100 to 150 rupees. So far, their portfolio is 18% returns.
Wow, 18% is huge.
Absolutely correct.
Amazing.
Which is better than FDs, better than mutual funds, better than any other asset class.
Exactly. Undoubtedly. And what about you? How does your portfolio looks like?
So I'm having different strategies, which,
Mm-hmm.
as I mentioned, that I'm going to cover 5 strategies in my L1 program. So I'm following those strategies, and at the same time, I'm having a good mentorship program also, which is for 1 year, where one-to-one guidance will be provided from my side to fast track their investment journey. So in that also, I'm going to cover few advanced level strategies. So I'm following those strategies also. Different portfolios I'm having, and all of them are doing good. And at the same time, yes, during market downturns, Rachana, the your strategies also take U-turn. When those stocks take U-turn, you should be ready to take exit, because
Right.
your exit rule is triggered. You have to take exit, and you should be ready to give the loss to the stock market. If
Right.
you are ready to give loss to the stock market, then only the market also will reward to you in terms of profits.
Mm-hmm. Absolutely. So now is the time for some fun. And let's do a rapid fire round.
Oh, is it okay?
Yeah, it is going to be fun. Nothing brainstorming or something.
Okay.
Okay, so are you ready?
Yeah, go ahead.
Okay, so first question. What is the best investment you have personally ever made?
Best investment on myself. Learning
Okay,
stock market, that is the best investment I have made.
right. So, what's one investment mistake you made that gave you a big lesson?
WhatsApp tip, potential multi-bagger WhatsApp tip.
I knew that was coming. Okay, so the next question, if you had to give one piece of advice to your younger self about money, what would that be?
Don't chase for quick returns. Instead, focus on process strategy.
Wonderful. And if you suddenly got 10 crore rupees today, what would you do with that?
I would uh, rather than probably I'll purchase one villa for myself and for my family, and then
Okay.
some portion in long-term investment for my retirement.
Wow, that's nice. Very nice. That was fun actually. So, Maruthish, if you have to give one takeaway from this entire episode for our audience, what would that be?
So it's amazing, Rachna. I mean, getting people into this podcast, sharing their learnings, sharing their success and failures, that helps the audience not to repeat those mistakes. Now, I believe your listeners, your audience will don't chase the WhatsApp tips or Telegram tips. So that and also they become rule-based investors, or else they take safest route of mutual fund investment, and also they start investing without fear. After seeing these episode, I guess they will start investing at least small amount of money.
Exactly. So, audience, please start right now. There is never late. So, if you have learning about this thing now, so start it now. Even if you have 100 rupees in your pocket right now, just invest it. Don't think more about it. So, it's just a
Yeah,
step by step journey. Just at least take your first step. You will reach to your destination. Don't worry about destination.
correct. So I would like to repeat here again the Warren Buffett quote: "Timing the market is not important. Time in the market is more important."
Exactly. Wow. Thank you so much, Marutish. This was really an insightful conversation with you.
Thank you, Rachna. Thank you so much for giving me this opportunity. I hope this was I could share my learnings, my failures, my success stories with you, and also with your audience. And once again, thank you so much. Keep inspiring others by bringing lots of people into this podcast, and I wish you all the very best.
Thank you so much, Marutish. Thank you. I'm sure everyone listening here is taking something or the other valuable tips from your success and your failures. Thank you so
Thank you.
much.
Thank you.
That was an insightful conversation with Marutish Babu. I hope you are walking away today feeling a little more confident about money, a little more inspired to take action, and a lot more open to building wealth both in your wallet and in your mindset. If you found this episode valuable, don't forget to like, share, and subscribe so more people can learn these simple yet powerful truths about investing. And of course, check out Maruthish's work, whether it's his stock market intensive training program or his best-selling book on affirmations. You'll find a treasure chest of wisdom waiting for you. Thank you so much for tuning in. So I'll see you in the next podcast. Until next time, keep growing, keep learning, and as always, keep blossoming every day.